All right, recording started again because we don't want to get flagged by YouTube and get the video taken down because of it. So we're gonna go into the next lesson for today. I know what I talked about yesterday, and I might repeat some stuff, because it just some stuff works along with other stuff, right? So it goes two and two together. They're together. So today I'm gonna start off with some of the analysis that we did yesterday. What
Wait, wait,
about?
wait, 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 wait,
Yes,
wait.
sir.
Before you do this, do you have sound on?
Yes, it's recording with sound. Yes, I
Okay,
I made
okay,
sure.
okay.
And so everything's working, Jeremy. Everything's working. I made sure of it.
Jerry
Now
told me to tell you the other way.
that's fine. It's working. It's working. So the today we're gonna talk about topping candles, continuation setups, and time on the candles, time on trades. A little bit about volume. Volume it doesn't necessarily have a big topic on it. There's like a certain things about it, and I'm pretty sure you've seen it. You know that you spend enough time on the market, you're gonna start feeling like, okay, this is what happened with volume and whatnot. Because there's a lot of things that people teach or that you get taught in the online on YouTube traders. I guess I'm one of them, but that that they're incorrect, and you realize this whenever you're trading the market yourself. Uh, so I'm gonna pass you this information, so I guess you don't have to stumble into this problem. It's on volume specifically, and also the concept of breaking breaking new highs, and all this stuff, right? So uh, let's start. Let's start. Yesterday's analysis. If you guys to go back to YouTube and go into the last charts and chat that I had on yesterday, so it's gonna be my last charts and chat for a while. We're gonna dive a little bit into ES or SPX. ES first, daily candles, and something that they teach you on YouTube, retail trading, and all this stuff. It's gonna be candle formations, type of candles. Whenever you have those names like the dojis, dragonflies, engulfing candles, hammer candles, blah blah blah. Right. So maximize sell. Come on. I need to keep an eye on my trades on the other screen. Okay. I'm Coolio. So I wanna divert your attention to this candle, like this candle right here, yesterday's candle. So if you have read this on anywhere about candle formation, you'll know that this is considered, whenever you have an uptrend like this is considered a topping candle. Meaning, like, you have a candle like this before a big leg down, and you can find a lot of examples that do that does work like that. In fact, there's, I guess, a little bit of an example right here, but it's not necessarily a candle like this. It is a doji. Both are a doji, but this one has a large wick to the high, so it's considered a dragonfly, right? I forgot the names, but a shooting star. I'm sorry, shooting star. It's a shooting star, right? So it's coming down. So in reverse, you have something like that. I guess this is something similar. No, this is a doji. But if you have this in reverse on the whenever you're in a downtrend and it's at the lows, somewhere like right here, you're gonna have a hammer. That's what they call it. But why do these candles sometimes tend to fail and not indicate that the next sessions are gonna be down or up? You only know this after the market has done some things, and here you are. So a topping candle like this will respect a prior candle's close and highs on the next session. Meaning, like, if you're gonna come down on the next session, and this ended up being a topping candle, the the next session will only have the highs somewhere around this area, and the market can actually poke it by a little bit, and it still be a topping candle. That most of the selling activity that took place at the highs on this whole wick will stay intact, and the next weight is down where all this buying pressure is feeling weak, and now they have to unload their positions on the way down, right? So that's the premise of it, right? Like at that point, whenever you start trading about the close and everything from the little body that the prior candle had, you're talking about, okay, it wasn't a topping candle after all, right? When we may hit higher. Now, these candles, you gotta consider that the wick, the whole wick right here, could could still potentially reject that 50% of it, right? So I always look at midpoints of anything that you see, right? Midpoints of anything that you see as a potential resistance, a potential area, right? So midpoint of this wick ends up being right here. We're gonna remove this. Give me a second real quick. You'll find out that this level intraday is gonna be some kind of a problem right here. Let me see, 15-minute chart. Let's look at this on the 15-minute real quick. Okay. Um, I guess the price is bouncing around it, but really I don't see that much confluence on the highs and lows of intraday. But the thing is right here. Like if you end up rejecting right here, you can still call for a day down. At that, if you have a big wick and consider the midpoint of that, right? Or actually, a lot of the times it's considered the midpoint of the whole prior day range. But as of this moment, when you're trading higher than this, it's not a topping candle anymore. No, it's not a topping candle anymore, and the idea of trending down today should be kind of tossed out of the window at that point. Can it still come down later? Yeah, I mean the market it's not a precise thing. We still may have a down day and whatnot, but you know, odds probability say that you're not gonna top out right here because of what just did. You know what we're doing right now. So, yeah, but we can still have a lower high. So keep that in mind and everything, right? Because we can have a series of candles that are making lower highs and then eventually rolling over. But I will say for me at least for today's session, just look at we're not gonna have a topping candle. If you notice right here, this is a little bit different because it's not a shooting star. We have the next day highs. It's still coming in very close to the prior day's highs, but it did not even take them out, right? Like if you go back to here, you see this high being just shy a couple of ticks of taking this high out and eventually rolling over, right? And if you remember yesterday, I told you that there's a very high likely chance that that the markets, the candles on the daily will take an extreme, of the prior day range. So either the highs or the lows. So at one point of the day, if you don't take out the highs, what's next, right? The most likely scenario is to take out the prior day lows, and this candle ended up taking three lows. This one, this low, and this low right here. So we did top that on this one. That it works a little bit different when you have like a very small size doji right here. Very tight range on that day. So yeah, so that's the deal with topping candles. I would like to find a an example on this. I think TSM had a last year had a topping candle. Let me see if it did real quick. I'm gonna have to add more. I think more. Look, this is much better. If you see something like this is much better for to call like down days for the upcoming days when you have seen the market pull back like this. Whenever you have a topping candle that does have a full body, like very large, that it got up from the open and it gave it all back during the session. You can start aiming for lower prices the next day. You know, instead of like having a doji or some kind of dragonfly or something like that, you rather have something like this, or even this one would work a little bit. but not necessarily. And this is whenever you have an uptrend, right? This is whenever you're making new highs because you don't wanna. Okay, we have this candle, but somewhere on the lows, no, you can probably. I mean, that's sometimes it's capitulation, and you may have some way up. So let's see. Let me see. I didn't see the topping candle that I wanted to show you guys. Maybe it wasn't last year, but the year before. Give me 3 years. If I remember correctly, TSM had one like that. Mm, yeah, not precisely. So I don't see it. Maybe I'm in the wrong stock, but if you have an example for me, I'll pull it up and we'll discuss it, analyze it, and everything. So I don't remember right now. By the way, we're back to the highs on MU. Maybe it's a place to take the trade off. Okay, so that's with topping candles, right? So it works the same way as the bottoming candles. Bottoming candles, a lot of the times you're gonna find yourself with something that resembles a like like the trend is over. We do have like a, I guess like a hammer candle or something at the lows, and we end up still rolling down some more. And I don't see this example right here. Do we have it on ES? Should have put up some examples before doing the lesson. We're improvising this lesson, so let's see. Come on. I don't see any. Something like this, I guess. I guess I'll see an example right here. You know, so you have a candle that does look like a hammer candle. Those look like it was gonna start reversing to the highs at that point, and eventually we start rolling over the next day. So you gotta be careful that even those type of setups, they gonna catch you on the wrong side a lot of the times. You ended up having a downside day, you ended up having a doji. It's only a little retracement up to then drop later. So, and it's not all the time. You end up having some days, that you have a little doji like this, and then we end up having an upside candle. But gotta remember that those setups they're taught up to the retail community like a lot. So it's like one of the first things that you learn out there. Or you have a high like this, and it's over. To the downside. I need to see a good, perfectly topping candle, man. I hate TOS. TOS is lagging today a lot. Trying to catch trying to see like something like UPST. No, actually didn't top down like that. I'll find you an example later, guys, and I'll find you an example later. Okay, so I'm gonna move on to the next topic, which is gonna be time on the candles, and I think I will use NQ for this example, and this is gonna be a little bit different on futures and a little bit different on stocks, and this is why a lot of the times here in the VIP we trade the open. We trade the open. Okay. Look, this is an example of a topping candle that didn't work out. You know, this little candle right here ends up calling for an end of the move, right? Here on the Q's daily, NQ. And the next day we have this. So the next day I'm coming into the session that we're gonna have continuation higher because you'll know that a lot of sellers jump into this candle right here. Not a lot of sellers, but whatever sellers that they came in, they're gonna be wrong. It looks like okay, the trend up is higher. We broke a new high. Let's start rolling over, and the next thing you know, you're still heading higher. So that's a good example of a failed topping candle. This is actually a very good example. This is probably what I was looking for, but I thought it was on ES. We're at target on MU, guys. Let me see. play right here. We're a target. We're looking at what was our entry on this? Up 104%. Well, it just pulled back a little. It just pulled back a little, but I think it's a good place to trend. We hit that target. We hit that target, which is I don't know if it's gonna double top, but if we end up going a little higher, then we're gonna be looking for 90.74. I'm sorry. Let's do some trend right here. All right. So moving on, I think we're having that expansion on NQ. So this is gonna be a good lesson for you guys here on futures. Futures, we're gonna be looking at time on the candles, but that they tend to function a lot more during small time frames than, let's say, on individual stocks, because individual stocks a lot of times tend to make their whole day range on the first hour and a half or so. Like you'll see a lot of them going up from the open, going up from the open, not stop non-stop, and then not move the rest of the day. Either hang out the highs or fully reject back down, stuff like that, right? So a lot of times when we spot a candle that can be expanded to the upside, we usually, if it has the right entry, we join at the open, because if we can get that expansion at the beginning and then not waste our time the rest of the day, it's good, right? It doesn't happen all the time like that, but a lot. I mean, it's a lot of times it's just like that. It's just like that, especially on stuff that is not a mega cap. Especially on stuff that is not a mega cap, that it's a small, like a little smaller, something like Roku, we'll do something like that, have the initial day range on the first 15 minutes and then either dump it or hang at the highs or just mess around in between. And us that we do options, we want a fast move expansion, something like it's happening right now, okay? So we're up 50%, 53% on the Qs. It's a more decent gain. New highs on MU. We're aiming for this shaded area on the Qs, and we're gonna talk about here on the time candles because this is important. Okay, a lot of the times you're gonna find yourself looking at a candle like this. We're gonna look at this bottoming candle right here on NQ. So what I was present when this candle was happening. So whenever this candle was happening, the it looked pretty red. If you notice, it traded all the way down like this, and this is a 5-minute time frame. So whenever this candle was happening, we were looking at this to be a very red candle on the first minute and a half that it was on its formation, that it was happening. So at that point, you want to look back to what the candles bodies, how large of the candles bodies are, right? So you want to kind of measure the candle sizes from in between the whole range, right? Like this candle is about 28 points. I'm sorry. This other candle right here is roughly 30 points. So you can get a sense of that an average of the candles are 30 points, right? So you open right here, you drop down towards 19 points. Usually a trade on the Qs and everything, you want to give it a stop of 10 points or so, right? So you drop 19 points, and I don't even remember if it went to the highs first and then to the lows. But if it did go if it did go to the highs and then to the lows, you'll notice that this is already 30-point range, 31-point range. This is very important. right? So you already know that if you came back to the if you went to the highs and then rejected back down, and it's only been a minute and a half of the candle, which is lifespan is 5 minute candles, you know that the rest of the candle will have some price action in the same range that you have on that candle. So at that moment, whenever you're coming back down with only having so little of the candle formation on time done, you can start expecting that there's gonna be a little bit of trade sideways, or that the candle has not had resolution until it's closer to the 5 minute end mark. You know, kind of like what just happened right now. This is I don't know if you guys pay attention to what just happened right now. This 5 minute candle just ended right now, and if you notice, most of the 5 minute candle was done um, was very bullish. This was a very green candle for most of its life of the 5 minute candle. So for about 4 minutes or so, it was just going green, higher, higher. It was staying at the highs, and the last I don't know how many seconds, I didn't catch it, but how many seconds did it stay like that? It actually pulled back at the end of the candle. So the candle that you end up with is something different than what you were looking at when it was forming at the high. So you gotta make sure that your entries are not coming in at the very what's it called, with a lot of time left for the candle to do another thing, right? So I guess we'll use as an example. This one dropped down on the first minute. This made the whole range on the first minute, and it's touching this prior candle highs. So it has all the time in the world, which is only 4 minutes. It's just a saying that I have. It has all the time in the world to reverse back up. So if you find that the candle held down the range at 4 minutes and a half into the candle formation, then you can start calling it, okay, it's a full bearish candle. It's not what I thought it was gonna be. But at this point, dropping like that and then bouncing the rest of the candle like that is gonna be looking a lot different. A lot of different picture. This is just like this, right? This candle dropped at the very first minute and a half, just went boom back down. It looked super bearish that the market was pulling back, and then the rest of the candle was spent going back up, and we ended up having some kind of hammer candle like that. So that will tell you right there that you know the you should not jump like it covers the whole range. It's 1 minute in. I'm not gonna enter shorts right here. Not because, I mean, I guess you can call it hindsight 2020, but this is the problem, right? Like, you made the whole range in only 1 minute. You has a highly likely chance of reversing, or has a likely chance of just messing around, right? It's not gonna continue lower, so you don't want to be stuck in something like that, right? So either wait for the candle to almost end and then you enter the trade, or you can enter the trade when the candle starts, because it's the same idea. If you enter the trade when the candle's gonna is about to start, you can actually, like, you call this a topping candle. Let's say you broke a high, you think it's bearish and whatnot. And I forgot to trim the cues, by the way, because I'm talking. We saw that high. We saw it was 50%, and I forgot to trim it. We're still in profits, but yeah. Anyway, the so I don't know if you guys understand, and I would like some questions about this, or some affirmations from you guys that you understand, because time on the candles is very important if you're trading, especially futures. You're right. So look at this candle, right? Uh, it looked like it could reverse back up. It already met the candle range, but now we're looking. Look at your clock. 4 minutes into the candle, and we're still full body down. So at this point, if you're 3 minutes and a half past, you can start assuming that this candle is actually very real, very real. Like it has very low chance of reversing now. But now, think of it like this. This happens on all time frame candles. Put this in your notes or whatever. This happens on all time frame candles, because on the 5 minutes, it does it works like that. The beginning of the candle, and then you want to see the action at the end of the candle, stuff like that. You might wanna, whenever you're about to start a candle, you have a bias or long or short, kind of like this. Whenever this candle ended and this one started going up from the beginning of this candle, and it ended up being a very bullish candle at the end of it. So you have two ways, right? To confirm what the candle formation is, you want to see how what is gonna end up as at the very end of the candle, or you want to join the next trade when the next candle begins. This works, like I said, for the 5 minutes. I go into the next, then my next time frame after the 5 minutes is my 15-minute chart, and it works the same way. Whenever I have a new, you hear me all day whenever I tell you a new 15-minute candle coming in, because I'm looking at the time frame that we could have the expansionary move on the next 15-minute candle or so, right? Whenever it starts, when that's when you have the this is when you have the highest volatility. When a 5-minute candle starts, obviously with a 5-minute range, 15-minute candle starts with its range, 30 minutes, 1 hour, and then I don't necessarily know if the 4 hour, but you can arguably say on the daily candle as well, right? Because a lot of the dailies, a lot of the days we just happen to have a very expansionary move at the open. It's just how it works, right? That's when the algos go in. That's when the volume comes in and everything. So when I look at those times, keep in mind your clock. You always have to be having an eye on it whenever you're gonna enter a trade or not, especially intraday, right? Not at the open, but somewhere intraday. You want to make sure you're looking at that clock where you are sitting, because we just have a new hourly candle. This is when you pull up your hourly chart. Let's see where you're at, the 30-minute and hourly chart on the Qs right now. So a lot of wicks at the highs, and if you notice on the hourly candle, I don't use trend lines, but you can see there's a lot of higher lows. I'm sorry, higher highs as we're coming in higher. I don't know if the next candle is gonna continue its trend like that, but the picture is a little bit different to what you saw in the 5 minutes. On the 5 minutes, looks like okay, it's gonna start rolling over and whatnot. Over here, it just seems like business as usual, right? Business as usual, and we're gonna look at this hourly range right here with a fib. See where we at. 50% of the prior hourly range is the lows right now. So this can also drop into a 618, which is this candle close, and see if we get a wake up or something for further upside. I'm not getting my target to the upside, so I don't know if it's gonna happen or not. This is not calling for a trend reversal yet, but you gotta make sure that you're looking at your time frame. I mean, you'll see just right now that volatility came in because the last hourly candle ended and the new hourly candle started. This a little volatility action, larger price moves and all that will come in whenever you have those opening and closes of the candle. So it's very important, guys, very important. And why is it different from stocks? Is because on futures or indices and all that stuff, they have more action in between intraday. There's more stuff in between, and my that's why we are more successful on the VIP on individual stocks, because if I can imagine what the daily candle can be on something like MU, I can predict. My analysis can predict the next daily candle on MU. So my analysis predicted this. You go back to charts and chat, and this is what I predicted. But usually, like you'll do that, you know, either at the open or just yeah, somewhere like at the open or some kind of trend after the open has settled. But on futures or indices, it's more like you can do sometimes you can it's very hard to predict the next daily candle, like up to the highs or up to the lows, right? So my aim on this trade right here, as you guys know on MU, was only a break this high. By how much? Be my guess. But that's when we started measuring the candles, right? So on future is a lot harder, guys. And on future is a lot harder to assume what the whole daily candle is gonna be. It's just hard. It's there's a lot more participants. There's a lot more factors. There's a price is moved by buyers and sellers, right? But if you can imagine that on the queues you have 100 stocks with 100 buyers and 100 sellers. I mean, not even like that, right? It's just, but it's just 100 different auctions, not buyers and sellers. 100 different auctions happening at the same time. So it's just much harder to predict those moves. Whereas over here it's only one auction happening at the on one individual stock. So that's my take on it. That's my take on it. The so that's it with the time frame candle. So this actually works very very well with weekly candles as well. So if you happen to have a setup, this is when a lot of my trades that happen on Monday that tend to run on Tuesday, Wednesday, Thursday. Something like multiple days, or sometimes we join on a Monday, doesn't work, and then it reverses back up on Tuesday because we have a weekly setup that doesn't matter if it messed around on the first couple of days, but the weekly setup is still gonna happen maybe until Friday. So it's very important, like, okay, if we get the ideal entry so we don't die to Theta Decay because we play weeklies, right? But what's important right here is that damn, we're I guess we're rolling over. Yeah, that's what it looks like now. Have your stops and everything, guys. So that's why I can focus whenever I'm talking, and there's charts moving. So yeah, so that happens because with weekly candle has an expected range, kind of like that. So an average range for the weekly candles, and then you find yourself that that like by Tuesday or something we haven't done any of that range. The next days are like expansionary moves or so, because you have the rest of the week to do it, right? So TSM was a very good example. TSM was a very good example, but on the daily and on the weekly as well, weekly and daily. Okay, so when Benny came in with this trade, and I'm gonna repeat this trade a lot because it's a very very good example for us to take into the future. Benny was looking at this, the weekly candle was about, I think it was about somewhere like this little ass size, like this small right here, like, and this is when we're talking about post earnings candle, right? This is a post earnings weekly candle, so you can expect that it can be larger, but at a minimum, if you look at any average size candle on TSM, right off the, like, just looking at any average size candle, to me, like, just without measuring exactly, you can see that this overshadows the what was at the range before Benny took that trade. So based on this, you can expect that the candle can expand more. Okay, you can you can you can expect that there's more business, more trade, more range to do because of this, right? So and same goes for the daily. And in fact, I think whenever I saw this chart, I saw that on the weekly, and then on the daily was even more tight. The candle before the move happened, it was let me tell you, it was this size. Oops. It was this size. when I opened it on my phone because I saw this on my phone. I remember it was about this size, that little bitty size. So whenever I saw that, it's like, okay, it's actually no. You know what? I remember it was below the open. So it had the open right here, and it was holding. Whenever I saw it, it was holding the prior day lows like this. It had just bounced from the prior day lows. I mean, sorry, prior day highs. So the little bitty TSM candle that it had before this large move up, you could start thinking, like, okay, there's a lot. Like, whenever somebody asks me, do we have room to run? You know, and when I say yes, it's because, okay, the candles prior to this have a much point. It moves in certain point size, 2 3 points, whatever the stock is, right? It depends on the stock, and um and it hasn't done it. Then is room there is room to this for it to move on the intraday. But if it hasn't, but if you're coming to ask me if there's room after you already made a candle range, like, I know this candle is larger than this. This candle is larger than this. But I'm gonna take this candle as an example. This size right here intraday. I think it's larger. Let me see. Yeah, slightly higher. So, at this point, even a little bit below, I'm gonna start telling you, that there's not much room. There's not a lot of room. That's probably it. And it went higher. But my point is, like, your risk reward is not there anymore. You're gonna catch I don't know, half a point with a lot of risk of pulling back, just like it did. It's not worth it. It's not worth it, right? So you kind of missed it. It's gone. But if you happen to stumble into a chart with a setup that it hasn't moved like this, and it's the same with MU actually. MU today, he already established a small range, but I thought, like, average candle size is double or triple that range that he already has whenever we enter the trade, and so there's possible more expansion. Hopefully not against us, but and fortunately it was for it was in her favor, yeah, to the upside. So yeah, that's what's up with those time frame candles, and gotta consider those whenever you hear me calling an average daily range, right? Like, just look at this, right? Look at this candle sizes. They're all the same. They're all the same size. So if you're coming in and you think this is breaking new highs, this is gonna go higher, you're coming in and you wanna buy calls right here, boy oh boy, the trade is over. The candle sizes are this much. You're thinking that today is gonna be the special day that TSM is gonna expand double the triple the size that it already does on a daily basis on an average day. No, and unless you can catch a big expansionary move, that's true. But that's more the odds say the probabilities say that you're gonna encounter an average daily move, and as a trader, yes, you can be in an expansionary move, but as a trader, you know that your responsible targets. You're not gonna be shooting for the moon every single time, but your responsible targets are gonna be an average daily range. And remember this too. An average daily range is applied in the intraday session, because you wouldn't think like, oh, the TSM usually moves. Let's just I don't know this. Let's look at an average candle. So TSM moves usually. Let's see, right here is 2.2%. A 2.2% candle right here. So usually TSM moves 2%. Let's call it like that. On earnings, you have a gap up into the prior day close of 8%. That doesn't mean that the daily range has been met. That doesn't mean that the daily range has been met. So considering that, it means that during the trading session, the candle will have plus or minus some type of range that whatever the usual move is, right? So we took this example, and this usual move is it was 2.16 points, 2.16 points, so around 2 points, right? And at the end of the day, this is a earnings candle, so you can expect a little more. But intraday, this moved almost 4 points, 3.96 points, so almost 4 points that it moved. So a little bit of double the size than that those candles right there, but a little less than double the size. I'm sorry, but this is what I'm talking about. Like it just you just don't add those pre-market ranges to consider the intraday. You can actually you can move so much more, right? Keep this in mind a lot, guys, because this is gonna help you not chase stuff. Not because oh you see the intraday chart, it just keeps coming down, 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 but because the move is, I mean, it has met the daily range, and this is actually if you are on a trade that is coming into the average daily range, and and you want to take profits, take them at the average daily range, the ATR, and there's tools that will tell you what the ATR is. I don't use it. I don't use them. You can Google them. Uh, there's indicators, right? There's indicators for the ATR and whatnot. I don't use it myself because I think that you can just eyeball it. Honestly, you can just eyeball it. It doesn't even take that much of an effort. You can just eyeball it. That maybe TSM is not that good of an example, but I guess we can use something like I guess Tesla. Now remember, like today, Tesla is having earnings, so today's candle will be larger than this. But like this is gonna avoid you going into a long at the highs of this candle, and I'm talking about a day trade because I know the next day went higher, but a day trade right here because you already know that it's already above any daily range just by eyeballing it. Like I don't need. There's some days that are smaller. I know that, right? Are you looking at expansionary move or buying the dip at a certain area or something like that, right? And it's one of the reasons why a lot of the setups are we look for compression into expansion because we don't want to we don't want to be part of some little bit of candle like this. We want to be part of the big one. The big one. We don't want to waste our time on the little bitty candles. There's no way you can predict every single candle of the market. So you want to look for those setups that will give you the more than average. And so these two things are gonna aid you a lot to know if you're still able to catch a move on that trade, or if you still or if you should stay out, or if you should be taking profits. So you're gonna start combining the time that you spent on the candle, how far has it gone throughout the day, and the average daily range, and the average daily expansionary move. Because a lot of times, like okay, you're an expansionary move like this one, right? You know that you're taking out two candle highs, you're breaking this high, so your mind should be running into okay, this is more than an average daily range. We're gonna go for two ATRs or something like that. Because you're noticing the bull flag or something, right? Or that you're coming in out of compression. So your aim should be like, okay, I'm not gonna eyeball. I'm in this move. I'm not gonna eyeball an average daily range like this. I'm gonna eyeball a large candle. This one, this one, this one, this one. You know, I this one eyeball the. You can measure it. You can actually a lot of what I do just to show people because I can see it with my eyes. I don't have to draw anything just to show people it's like okay, draw a shaded area from highs to lows of the candle and extrapolate it. You got the open right here, and then see you have the lows right there, and see if you can move just as the same size of the large candle, and you notice that it's almost the same size, right? It's the same size actually, Bert. Um, so it's a relatively same size. So so you can start aiming. If you notice you are in an expansionary move, you can start looking for the left to see what an expansion candle look like on range. And you're gonna stop asking yourself, or even other people, is it still to get in? Is there more room? You're gonna know. You're gonna know. This is gonna aid you a lot. So going back to this, you're coming into this day, you're at the highs, you feel like Tesla's super strong that day, and you think it's gonna go to the moon. Hold yourself, pull back the daily, and look at your clock. The session only has 2 hours left. We already met that average daily range from an expansionary move at these highs. Is it smart to get in? The answer is no. Right? So this is gonna aid you a lot, in my opinion, right? My opinion is that it's gonna aid you to enter trades, and it's gonna aid you to not enter trades. Does this make sense to you guys? Or am I spitting out gibberish? Any questions? Any questions on this? Like any questions? Like I like is there something you would like to know about this?
For Tesla?
No,
Is that
no,
what we're talking about?
no, sir. Not for Tesla. I'm talking about time on the candles and average to range, but we're not talking about any specific stock. We're
I
using
think I
Tesla
gotta
as an
start from the
example.
basics. Because I don't understand a lot of this stuff yet.
Well, that's what I'm saying. Like, ask the questions that you don't understand, because I am, like I said, I want you guys to. It may not, like, if you guys can come back and rewatch it and try to see that if it clicks for you, right?
Yeah.
We can do a live example right now. Google. Let's do a clean drawing set. So Google right here. Oh shit, it ain't cleaning. It's cleaner, I guess. So Google right here. You're right now. Let's see. Google has been strong all day. Pull back a little, and you think like, oh man, I should be getting into calls right now. Now is my chance that it pulled back. It hasn't pulled back all day. Right now we are in lunchtime. So past lunchtime. So already half of the session has been has is more than half of the session has been it's over. I believe, right? No, less, right? Has it been 4 hours? Let's see. So almost for 3 hours, right? 3 hours. So we're almost over into the day, almost into halfway point. So the Google has been rallying up all day. It's a break of a high. It had like a topping candle, kind of like an abandoned baby type of candle, but instead the next day we open higher. So this is already a setup to go long. And you right now you're coming into the market. This is the time you can trade, or you woke up late and whatever your reasoning is, and you feel like, man, looks strong. Let me come in into Google because it's gonna go up to the moon all the way to 160 or whatever your imagination gives you. Right now we're at 152 point 25. You're gonna look at this and be like, okay, how much of a range have we done, right? Let me look at some large candle that represented a expansionary move, right? Not some bitty little candle, because those were compression or whatever, and extrapolate this move. Holy shit, we almost met that candle right there. And from eyeballing it, We have done a pretty good chunkable size. You can call it like an average daily range already. An average daily range, not even an expansionary move. It looks like an average daily range. The day is almost halfway done. What would your mindset should be right here? Your mindset should be, I already missed that trade. It's over. I didn't join in. I didn't get my entry. This one had a very nice entry. Gapped up about prior day's highs. Came back into prior day's highs. Touched it. Held it. And to the upside. So this was a good setup. This was a good setup to get in. This is where you come in and do a pre-market scan. I'm gonna show you my scanner from the pre-market actually, to find those type of this one. I'm pretty sure I can't say anymore because I didn't come into the market to see it, but I am pretty sure Google came into the scanner because this is a criteria. This is a criteria that the scanner is for. All right, here I'm gonna post it on chat. That's the scanner that I use for the pre-market. This is for a larger moves to the upside on pre-market. You know, where the pre-market has recovered a lot of that move. So you would have caught this just by going through the scanner, and then obviously you go to the chart, and you have to see how far are you from the prior day highs. Where are you on your daily structure? How far of the weekly range have you done? So and so and so forth, right? You don't just go, oh, the scanner shows me this many stocks and me long all of them. No, right? Doesn't work like that. But it'll put this setup on your radar using the scanner like that. This is on TOS. Use it to your advantage. So that's that. This is what I was talking about yesterday on pre-market preparation. Yesterday I was talking about what you do the prior day to find those setups on pre-market. You go back, you go to the scanners, and you start finding those setups. The bearish one is right here, but it doesn't call up for large moves. I only have a negative 2%, so you still gotta find some very good setups. This is gonna be a lot more crowded on the mornings. That's the bearish one, and the mile one for the open. Because if you don't find anything good on the 5%, you lower your criteria down a little bit, and then you use this one right here. Right there, you got the 3 scanners that I use on pre-market right there and then. Right now it's not a good time to show you an example. It should actually be on pre-market. But they're right there. Any questions about this? This is very important, guys, to notice average daily ranges and time on the candles. I'll give you an example of a candle that did its daily range and the next, the rest.
I don't understand. How do you figure out the daily range? I'm confused. So, go to chart.
Go to a chart, go to your daily, and you can do what I do, which is eyeball it. Eyeball
How do
and
I switch to daily? Let them have it. I have it on 1 year chart. I don't know how to change
on
it.
your own TOS.
Yeah.
So you click on your look at this little tab right here. I don't know if you're watching my screen, but
I see
there's
it. I see it. I see
okay.
it.
You look at this little tab, and you're gonna. This is all the time frames, and it
Uh
says when whatever it says D 1 year
huh.
to 1 day that you're gonna see all the daily candles from today's into the day from last year into 1 whole year from now.
Okay.
So all those candles are gonna be on the daily, and you
So
wanna
you're
see,
on
huh?
which one you're on? You're a 1 day, 1 year,
Yeah,
or we are okay. 1 day,
yeah.
1 year. Okay.
So
I
you're
thought
gonna,
mine looks
huh?
different. I don't know. Mine looks different than yours. I don't
This
know
is
why.
on Google.
Yeah, yeah. Yeah. I'm on Google too, but mine looks different. I'm
Share
confused.
share the picture, and I'll tell you if there's anything wrong with it.
Yeah. How do I share the picture?
Up, nice one, Eyeless. Nice one. Is this new information for you, Eyeless? Like I'm gonna tell you something. This nobody taught me this. I came up with this. I never saw something like this, but this is just comes from experience, right? Like I've been a lot on this talks, and like why a lot of the times where like why am I in calls and there's like when the movie's done, or like I and it just is and people just throw at you like it's because you're chasing. But then I'm asking my question like what at what point is this chasing? At what point is the setup not there anymore? At what point, So that's why I start putting two together, and boom.
Hello, can you hear me?
Yes, I can hear you.
You might have covered this, but is there a way to do it without eyeballing it? So let's say you take like because you're only comparing candles
Yeah.
that are expansion days, right? So let's say you take, is there like an indicator or some way to figure out only on expansion days what's the average percent?
Yes, yes. Let me see. I don't. It's been a long time. I did try it, but let me see if the ATR does can tell us something right here. Oops. Add selected.
Hey, just let you know, PayPal event is on right now.
I'll check them out in a little bit. So there's an indicator right here that's called ATR. I don't remember how to use it honestly. Um, but let's see. Honestly, I don't remember how to use the ATR indicator, but there is. You can Google it. The average to range indicator will tell you if you are larger than the usual. But I think this calculates also the pre-market because I don't know if you noticed this biggest spike
Mm-hmm.
is coming in because from year to year there was a large drop, and not necessarily means like okay we're like diverging. It doesn't. This indicator doesn't work like that. It's more of a like okay the move is way larger than the usual one. So one I think one ATR, which is the very bottom of this little thing. I believe. Oh, I'm not sure. No, it's actually goes a little lower. So I think there's a midpoint to this because I don't remember exactly, but this indicator will tell you if you're far or not from ATR. To me, in my opinion, to me, it's better to do eyeball it, right? Because you're not exactly gonna get those daily ranges or I mean those the many points that you had on the past before. You're gonna have it like somewhere close, plus or minus. Give it a little bit of room. You know what I mean? A lot of the times, even when you use support resistances, whenever you aiming for a target, I mean, give it a little bit of room, plus or minus, because you have no idea. You have an idea that there's a possible wall right there, and if you and the rest of the market, so you can bet yourself that either the market's gonna reject before because you yourself are thinking that they should put your limit orders before that, or or the market will poke that high because he'll do a little trap, you know, he'll do a little trap and then reverse back down. So even if you meet that daily range or you are about to meet that average to range, you should already be looking to take that out, right? And let me see. So you can actually this ATR, you can customize it because this actually measures the 14 past candles. You see this little
Yeah.
parameter right there. So maybe you
I
wanna change it.
yeah, I think I seen other people use it, but I never really got the explanation why. But now that I see how like you're talking about it now I see why people use ATR. So
Yeah,
this was helpful.
Wait,
yeah. This
how do
is
I
the
add the
reason.
ATR? How do I add the ATR? I don't know how to add it.
Well, you added, and by the way, I was looking at your picture, Remy, and it is the right chart. It's just that I'm zooming in a little more. I'm
Oh,
zooming.
okay, okay.
So
Oh
you
wait, wait.
wanna?
Look, let
It
me zoom
is.
in. Let me zoom in. But
Yes.
okay, so I have volume now. How do I add RSI and ATR? I don't know how.
So right here on TOS, the you have this little flask icon.
Uh
So
huh.
you're gonna click on that, and it's gonna give you all the studies right here. So you can just go to the search box, look at RSI if you want, then highlight it, click on it, and then you're gonna click on Add Selected, and then it's gonna show up right here, but you still gotta apply it. Apply it, then it's gonna show up right there. So you can actually
Oh, I got it.
yeah,
Thanks, man.
and then to remove them as well and everything. So you're gonna have some sub graphs and everything on the lows. I'm a very anti-indicator. I actually probably have I never look at RSI. I just have it as in a just to fill up some space, honestly. And obviously I don't use
I'm
ATR, so
weird.
I'm gonna remove it. But you know why now it's used, and it's just to me, like I said, it's not exactly a let's actually put 100. Let's see what it does with 100
Okay.
on the length.
I just use volume. I'm strange. I like volume.
Well, I'll give you my opinion on volume. There's this very good book on volume price analysis, but I can summarize you that book in one sentence.
Okay.
Read it because it's important to read it. It's part of the like. There's a ton of books that if you're trading, you have to have read them at least once. You know, it's just part of studying. And that one, I a lot
Is
of
it in the
it.
resources? Is it in
Huh?
the resources?
No.
Is the list of book of
List
resources?
of books. No, I can create a list of books. But from the top of my head, volume price analysis, the best loser wins, market wizards, and training the zone, disciplined trader, and what else? Let me remember. One did I like a lot. Well, best loser wins. I like it a lot, but yeah, I think that's about it. The ones that I like the most. Yeah,
Best loser wins.
yeah, by
The
Tom Harder.
trading, the trading room.
No,
What was the other
the
one?
the disciplined trader, and then
Disciplined trader.
yeah, that's by Mark Douglas. Also, Training the Zone is by Mark Douglas as well. Um, and then yeah, that one. So yeah, going back, eyeballing, I think is my opinion better. My opinion better, and you can actually um, measure this. You know, calculate it. You know, so there's a
Yeah, Playfair was
let me see.
ass. They released the event. It was bad. It was really bad. shows how their event showed how out of touch they are with like the real issues that their company is facing. It's like no faith in that company right now.
Look, I just found, just by Googling, I just found this indicator. Let's test it. We're gonna,
What did you get? What did you get?
uh, okay, I forgot how to add a freaking open share item. I think it's setup, open share item. Okay, you, how do I?
Fuck, my TOS is lagging. Hold on.
Okay, so we're gonna apply it right here. So once you import a study, you're gonna apply it, but I don't know if it has a name. I don't know if he had a name. How do I know? Oh man, it just says share item. I guess what I can do is try to add it again, but because it doesn't let me. It doesn't let me change the name of it, does it? This think script study 619. 619. Yeah, it doesn't let me change the name, so we're gonna go and look for it. See if it has 619 right here. So okay, we're gonna add selected. It goes to the chart. You can apply it. Oh, it comes at a line. No, it's supposed to add levels. I'm gonna remove this. There's two moving averages now. No, you gotta look around. There's a lot of people that make those scripts so the levels come up in the chart already. So they, whenever you trade in intraday, you already have the range of the highs and the lows that are usually the ATRs, right? But the ATR itself over here on the chart will tell you the number. The number is what you look for, not exactly the line, but what you look for is the number that you're showing up right there to see if you have met the range or not. Like ADR high and ADR low. Yeah, I don't know. I don't know. I'm just gonna cancel it. Because it's supposed to show, I'm not sure, picture. It's supposed to show something like this. Oh, you know what? It's probably because it's intraday. Let me try it again. Let me try it again. So we're gonna add the study. It was a 619, right? Okay, this one. Add selected. Apply. Okay, he's gonna show us moving averages, but okay, voila. It's right here. But this is like flipped. Should give me the ATR to the highs. So there's something wrong with the values on this. But it should give you the average range on the highs. But I guess on the 5-day, this is actually a 5-day average. So I guess if you take the range, it's gonna be about that size, I think. Yeah. Just probably the values are wrong that is showing on the other side. But like I said, I'd rather eyeball it. There's some people that actually chart, that they come up with the average and they chart that change. Okay. So I'm gonna remove this stuff that I don't use. But you guys get the idea, right? Do you guys get the idea? Just Google some scripts, guys. Google some scripts if you want to have that automated.
Sexy. I really need to learn how to use TOS though. Oh my god. The badness.
There's this very cool
Oh,
a couple of YouTube channels that show trading scripts indicators on TOS and
can
H.
you look at WDC for me? I know its earnings. Oh, Tesla hit my target 180 by the way.
I'll do it,
Completely out. I'm completely out. I'm completely out.
Remy.
No
If you
Tesla.
don't mind,
No all Teslas.
if you don't mind, Remy, I'll do it after the lesson. If you don't mind,
Yeah, sure.
just don't want to deviate from. We'll analyze charts later. And
How long does Tesla goes down?
so this is let me see. Not everything, but I tend to get in early on the candles. Okay. All right. So yeah, that's with that topic. I don't know. I hope it helps you guys. I hope it helps you. I hope it helps you. Mm, what else can we go for, guys? What else can we go for? What else can we teach you on this lesson? Yeah, you guys already know how we use the moving averages and how we use the fibs, right? And if you can go back to YouTube's channels and just type the in my YouTube channel the the fibs lesson. But if you wanna, I can just do it right now, if you guys wish.
I would love the fibs lesson. I don't actually know how to use fibs.
All right. This is also comes from eyeballing. Okay. There's not gonna be, and I think even if you find an indicator that will anchor your fibs at the, automatically, I wouldn't trust it because this requires a lot of your your intuition to where you anchor it, and it doesn't take like a big brain or like an like a born skill or however you're gonna call it. Like I wasn't born with this, it's just from looking at charts. I noticed, okay, a trend goes from year to year, it starts here and ends here. That's why you're gonna look at stuff, right? I'll give you an example on Google right here. The trend starts from here and here. Now this is gonna look like hindsight, but in reality, you know that the trend ended. You can start presumably start to think that the trend ended with this candle right here, because we had green, 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 and then red. But it's not all the time like that, because if you notice on this other example, you have green, 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 red, and the trend didn't end. The trend kept going higher. So the red candle after a green run up, it's only the beginning of a possible pullback. Not necessarily the pullback, but a possible pullback. When you have next after that a candle that does not represent anything bullish, right? So indecision candle or bearish candle, just like this, right? Like right here as well, it was going up, 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 and then you have this kind of topping candle. Like this one had a topping candle right here, but the next one does not have continuation lower, so the trend's not over. This was a topping candle, but the next candle, it is a bearish one. So you can start calling the trend over at this point. Kind of like this. You have a topping candle, a change of a candle, and then you have a candle that does represent a change of trend right here. Does not go bullish, or it has trend continuation or anything like that. And in fact, not even, it's undecision candle, in fact. But you can already tell the run was from low to high. So the key part about fibs, I guess what you would call the hardest part about fibs, it's the where you're gonna anchor from the lows to the highs of what, right? From the lows to the highs of what? So at this point that you realize that the trend has been over, you're gonna anchor it from the lows, right here, into the highs.
Wait. Before we go on, I when you say low to highs, like what's the time frame? That's why I could never
Well,
understand.
and
I could
this
never understand that part.
This works on any time frame, but any of the strategies that you see me pulling out, EMAs, fibs, daily rangers, prior candle highs breakout, all of them work on any time frame, but your gains are gonna be capped at the time frame that you look at. So meaning that if your analysis is done on the daily chart, you can if you can predict the next daily candle, you can catch almost the whole move of the day, right? You can catch almost the whole move of the day.
Okay, so I have a quick question. You said the whole move of the day, right? So
Yeah,
this chart that you're looking at right now is a zoomed in chart of the
daily.
chart
Oh,
for
on the daily.
daily, right?
Yeah.
Wow.
Zoom in into the last, I guess. It starts at the first candle that I see right here is December 14, and I'm just being focused on this part. That's why I'm zooming.
Okay. 1 year, 1 day. I'm just trying to figure out how to do this. Let's see. 1 year, 1 day. Okay. And then
To zoom in, all you gotta do is like drag and click, a
how
box.
do I zoom out? How do I zoom out?
But zoom out, to zoom out, you right click the chart, and then there's the first options. It says auto zoom, and it'll expand the chart again, just like
Okay.
this, right?
Okay.
Auto zoom, and also on your charts, you want to add some more candles. Yeah, there's a magnifying glass. I like to do this. This is a auto zoom candle like this, and then you just drag a box like this of whatever you want to look at, and then this is the box is this one, this range. Do you notice that? And then if you want to zoom in a little more, boom, right here. You want to zoom in a little more, but there's like a limit too. There's a limit, to how far you can zoom in. But you get the idea, right? Zoom in out of range, and this is how I just go back to see what I want to see on the candle. Pretty fast. You gotta learn how to use your platform pretty fast, guys, because to you gotta get familiar how to chart fast and execute fast your orders.
Okay.
You find the needs and grits of your platform, whatever platform you're using. Just find it so you can take full advantage of it. That's what I use, and I don't know if you notice, but a lot of the like default charts on TOS, and I don't know if other platforms will have the current daily candle that you're working with, or the current candle, the last candle to be all the way to the price right here. And if you notice, my daily chart does not does have all this empty space, and it's because I don't want the price just all the way to the end of the chart. And for that, because I noticed some of your guys' charts are like that, right? Like they just like Remy's. You have your daily candle all the way to the end. I feel like there's no room. You want to kind of center. So for that, pay attention. You're gonna open right here on settings. You're gonna go to time axis, and then you're gonna choose how many bars you want to the right after the last bar. I have 571. I don't know. I just put some random ass number on there, but you can have less. I think even 200 only bars to the right works good. But I have that because I want a little more space, so I can, I don't have all the ways mushed in into the right side onto the price candle right there. How many of you guys are using TOS, by the way? I know Benny. I see Benny's using it. I know Remy's using it. Anybody else is using TOS? Because I can teach you all these little tricks, or I guess information, not tricks. I guess information to keep your charts better, have more access to your tools, be faster on analyzing and everything. Like if you can even go to something like equities. Let's say that these red lines are very distracting for you because it is for some people. This represents every option every third Friday of the month. So every OPEX right here. So you can actually go to equities right here and then remove corporate actions, price display, price flyer. No, actually on the time axis, I think. Show rollover lines, show expiration Friday, and show year marking lines. So when the year starts and ends, you'll have a line as well. I don't know if you see this little line right here. This is where the year began. You can show the expiration Friday, and if you can clean your chart a little more, right? You can get rid of that expiration Friday. Boom's not there anymore, right? You see all those red lines that were like this, verticals, they're not there anymore. So you some people like to go into the general, and they like to get rid of the grid. So appearance, and you can get rid of the grid. Some people don't like the grid. I like it for references, but you see there's no more grid on my chart. Some people like to clean up their charts like that. Some people don't like the volume right here. They want it on a little subgraph. So you go back to the settings, you go to the appearance, and then you can choose the volume bars to be, where is it? I don't think it's here. Oh, there on background. No, the color of the background you can change it. I think it's on equities. Show, there's like a show volume subgraph. So you're gonna remove that. You're gonna apply it, and it's not gonna show you the volume anymore. You're gonna be removing it, but to add it, you can add volume right here. Wait, I don't see it. I think I just gotta add volume right here again on equities. Show volume subgraph, and instead of subgraph, you can go to the studies. Okay, I don't see it. Okay, I forgot how to do it, but you can actually choose your volume to be in a little box at the bottom. So it's some people like they don't like how it's very it's on top of the candle, so they're unable to see. Okay, right here, overlap volume, show price. Okay, so we're gonna go into overlap volume. No, I'm gonna apply. You see right here. Okay, now your volume is on a little box right here instead of the chart. So a lot of people find it useful because it's not on their way of the chart. So let me add my grade again because I like it. And let me actually put it as it was before, the volume as well. Oh, I'm gonna overlap the volume. I don't have problems with the volume being overlapped. It's a put prices forgot. Schwab has TOS now. I think it's retiring Street Smart, so I might finally use it. But I'm so used to TV, I might just use TOS for a scanner only. So TOS has a lot of scanning tools. I think charting it's a lot better on TradingView, but if you get used to TOS, it's pretty fast as well. Like my way of doing my charts real quick, it's mouse wheel click right here. You see, I just click the mouse wheel. You have all the tools right there right away. You got your price levels. You put it, boom, right away. You want to switch to the cursor again? Just cursor right here. Right away. You want to delete it? Just click on it. Press delete on your keyboard. It's out of the way. You want to customize it? You want to customize this level? Right click on it. Edit properties. Change the color. Change the width. Change the style. Put a name on it. Show the name. left extension and right extension, I have it on as default. It's not as default, but I have it on as default. That way I can just double click on it and the price is all the way through. Because if you don't have extension on, you have to click once for the where you started and once and a second time for where it ends. So I have it on, that way I just double click and the level is right there. I'll extend it to the right, I'll extend it to the left. And it works because in the future we might see those levels again and they're still valid. So I forgot that I deviated from the fibs. So going back to the fibs on this little example right here, mouse click right here, fib tool right here, going from the lows to the highs of the move. You already spotted that is the end of the trend. And where can you buy the dip? You can buy the dip even if you want at the 32, if you want to wait for the 50, and lastly, if you want to wait for the 618, and the stop is below this. So the 618, 65% retracement represent the best risk reward, right? Because if you're gonna go back to the highs plus more, your risk is below the 65% retracement. So the candle closing below this right here, and your reward is however this thing is gonna run. Okay. Go to the Fibs lesson on YouTube. It explains it very well. But that's the core idea. And then you have extensions. I use a 10% extension because a lot of the times the market just makes a little poke, and that tends to be the 10% extension, if not maybe more. And then I have the 50, but there's a lot. You can have the 32, the 618, and the 100% extension. As we shown yesterday, that the market did 100% extension from the last pullback. And on bearishness, you just anchor it up the other way. Instead of starting from the lows to the highs, you start from the highs to the lows. So where the move started to where the move ended. Let me see if I can find an example. I can do it on ES. So there's an example right here. So you spot this trend down, and you can actually spot this on the weekly. You can anchor your fibs from highs to lows of the trend. And actually, I think this trend, because it's probably best seen on the weekly. Because the weekly is gonna show you right here. So you anchor it differently, right? You started from here, you end it right here. The other way, whenever you do bullish, you start from here, and you notice that the 618 has flipped to the other side. So the entries for the shorts are gonna be the 32, 50%, and 618. You don't get a 618 all the time, but a 50% is still good. And then you're gonna get your short entry and see how it expands down. So that's basically it, guys. That's basically it. And I'm actually losing my breath a little bit. I'm actually gonna end the recording right here. And if we are missing some stuff, or if you guys want to learn something else and you guys got a lot of questions, I'm gonna show up tomorrow and do another one. It's fine with me. I got time. But I'm gonna end the recording right here.